Tired of watching your money disappear? You're in the right place. Let's save it. Welcome to Save It, where we make your money work harder. Please remember, this video is for entertainment purposes only and is not financial advice. Today we're diving into something truly exciting that could put a significant chunk of change back in your pocket. Tax-free overtime. Yes, you heard that right. A brand new provision in the recent tax plan could mean way less federal income tax on those extra hours you work. Let's break it down. So, what exactly is this no tax on overtime all about? Well, it's not a complete tax elimination, but a deduction. Starting in 2025, if you work more than 40 hours in a week, the overtime pay portion of your paycheck can now be deducted from your total income. What does that mean for you? It means a lower taxable income and ultimately, less money going to federal taxes. Let me clarify with an example. Let's say you normally make $25 an hour. When you work overtime, you get time and a half, so $37.50 an hour. This new deduction applies specifically to the extra amount you earn for that overtime. In this case, the additional $12.50 per hour. It's not your entire paycheck that becomes tax-free, just that premium portion that makes it overtime pay. This is crucial to understand. By deducting this amount, your adjusted gross income, AGI, becomes lower, which is the number the IRS uses to calculate your federal income tax liability. Now, before you start scheduling all the overtime shifts you can, let's talk about eligibility and some important limitations. This isn't a blanket rule for everyone. Hourly workers. First, this deduction primarily applies to non-exempt employees who are paid overtime under the Fair Labor Standards Act, FLSA. Think hourly wage earners, not typically salaried professionals who are exempt from overtime laws. Income phase-outs. There are income thresholds where this deduction begins to phase out. For single filers, if your modified adjusted gross income, MAGI, exceeds $150,000, the deduction starts to decrease. For married couples filing jointly, that threshold is $300,000. So, while it's a fantastic benefit, higher earners might see less of it. Deduction caps. There's also a limit to how much overtime pay you can deduct. This is capped at $12,500 for single filers and $25,000 for married couples filing jointly per year. Federal income tax only. It's vital to remember this deduction applies only to federal income tax. Your Social Security and Medicare, FICE, taxes on your overtime pay will still apply, as will any state or local income taxes unless your specific state implements similar legislation. So, how will you actually see this impact? While your employer will likely continue to withhold federal income tax from your overtime as usual throughout the year, the real benefit comes when you file your annual tax return. Your employer will be required to report your qualified overtime compensation separately on your Form W-2. This new reporting requirement will allow you to claim the deduction directly on your Form 1040, thereby reducing your overall taxable income. This means you could get a larger refund or owe less when tax season comes around. Now, critics point out that this specific provision might only benefit a smaller subset of workers, mainly those in the middle income bracket who regularly work overtime. Many low-income earners might already have very little federal income tax liability due to standard deductions and other credits, so the impact for them might be minimal. However, for those it does apply to, this deduction could translate to an average of $1,400 to $2,000 in annual federal tax savings. That's not pocket change. That's money you can use for savings, paying down debt, investing, or whatever helps you achieve your financial goals. That's our wrap-up on making your money go further. This no tax on overtime provision is a significant change, and it's a great reminder that staying informed about tax laws can genuinely put more money in your hands. Make sure you understand if you're eligible, keep an eye on your W-2 for that new reporting, and consult with a tax professional if you have specific questions about your situation. Please give this video a thumbs up, subscribe to the channel so you don't miss out on more ways to save it, and share it with a friend who may benefit from it. Thanks for watching, and I'll see you in the next one.